everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, keep in mind, as always, that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for you. We'll go over some ideas in that regard if we find a trade or two to simulate. The order window on our web trader and app has some built-in features that makes the risk management side of things quite a bit easier. And also keep in mind that what we go over is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can go ahead and log into the web trader platform in the upper right-hand corner, which allows you to trade on both the MT4 and MT5 accounts. And you'll find that it has the same functionalities and features as the AvaTrade app as well. Now, before we jump into the technical analysis side of things, which is the main focus of the session this evening, we should talk a little bit about what's happening from a fundamental perspective, just to get a feel for maybe which way the wind might be blowing, so to speak, for different instruments. A couple big storylines. One would be out of the US were the largest announcements today on the economic calendar, and pretty much straight across the board, the numbers came in with lower inflationary data than expected. The CPI data in particular is what came in. And whether we're looking year over year or month over month, whether we're looking at core inflation or the full inflationary data, all of it came in below expectation. So, you can look at that two different ways. One is it's great news that inflation is coming down more than expected. The other side of the coin is maybe the economy is slowing down a bit because if inflationary data is dropping, that's a sign that maybe there's less demand for things. Maybe people aren't buying things as much, which also plays a role with inflation coming down. So might be getting to a point where there's expectation now, and I know that expectation has been there from the Trump administration in the US for quite some time, but maybe more and more others will expect that perhaps a rate cut by the FOMC committee and Jerome Powell, who are making the monetary decisions in the US, maybe some traders will start to factor in maybe anticipation of a rate cut, maybe at some time between now and the end of this year, maybe even more than one rate cut, we'll see. But until now, they've been pretty stubborn with holding the rates in place, afraid to jolt the success that there's been with inflation coming down, because the idea is that if they lower interest rates too quickly, then demand goes up too quickly and inflation could come back to higher levels than maybe is healthy. So that happened today with inflationary data lower than expected. And I think all being looked at from both sides, it's more of a positive story than a negative. I think there's less fear about those numbers showing too slow of an economy, and maybe more of a appreciation for the fact that inflation is more and more under control. We did see an initial climb with the major indices, especially in the US, with that inflationary data coming in lower than expected. So it felt like more of a positive than a negative take that most traders had on that data. Now, the flip side, or I shouldn't say the flip side, but the other set of information or news that came in today, which also is quite important globally, not just to the US. There's apparently a framework that's been agreed upon between China and the US for a trade deal. The numbers I saw were 55% tariffs on Chinese goods and 10% tariffs on US goods. And that doesn't sound equal, but there are other what are called maybe barriers to trade that perhaps China has within their system that hurts American goods that are trying to be sold in China. And in the end, they worked out some deals also, even with Chinese students being allowed to continue to use US universities, because there's been some fear about some bio agents that were smuggled into the US by some Chinese students. And temporarily, Trump was blocking any further visas to be given to Chinese students coming into the U.S. In response to that bioagent. It was a type of mold, I believe, that it's pretty dangerous for crops that was smuggled in to the U.S. So they worked out some of those ideas as well within those negotiations today, and it looks like pretty much a good news story there. If that framework then is going to be signed on in the end, and it sounds like it might be. So those are two kind of good news stories for the markets, and they kind of responded in that way as well. Gold has been pulling down maybe a little bit. Platinum's been on a run. It's trying to catch up to gold. Traditionally, it was near or above the price of gold, and now it's way below after all the climbing gold did. So platinum's been on a run up in terms of precious metals, but gold took a dip down recently, and maybe it's dipping a bit more with the good news with the trade negotiations, as maybe a number of investors feel comfortable to go into the stock market maybe a bit more again, and not just the U.S. market. You can look in the European, the Australian, the Asian, UK, etc. Okay, so with that as a backdrop, then we take a look maybe at some of the charts and see what we can find that might be happening. So one thing we could bring up would be the US 500 or any major US index. The NASDAQ might make sense as well. And so as we look at the US 500, we're on a 2-hour chart here. We do see the climb that occurred with the news today that we just talked about. This spike here was timed with the CPI data, and the gradual climb, the news about China and US having trade negotiations, we knew about that since this morning, and for several hours we've known that the announcement was that there was an agreement reached. So a lot of climbing that was pretty obvious that was going to occur with those positive headlines. Now it looks like there's a bit of a pullback occurring right now. So fundamentally, maybe you're looking for a price to catch on a support level if this is going to pull back, if you feel like the fundamentals still tell you that the equities and major indices maybe are going to be bullish with the positive news today. So taking into account maybe that you feel there's positive fundamental news here for the equities, then we can take a look at the US 500 and zoom in maybe a little bit on this chart and see if we find a support level that you might be interested perhaps to buy from. So what we see here then is there's a support level here that was old resistance. So we see back here into last week resistance, and then as we come in to this week, still respecting that resistance, and then all of a sudden it breaks above there temporarily, and then just in the past day it's come back above that price and respected it as support. Okay, so this seems to be a somewhat important price level in the past week, starting out as resistance, then transitioning where it's going above and below, and then settling as support today with today's positive news. So this looks like a support level that, barring a change in the fundamental news, perhaps you trust that that spot could hold as support. Okay, and so if I was going to buy with today's positive fundamental news for the equities, then if I put my take profit at today's high, which is up here, let me just draw an extra line. Okay, today's high, 6,075 approximately. So if I'm saying take profit 6,074, 75, right in that range, so I don't have to break today's high to take profit. Stop loss would be below the support level, 6,000, and let's draw another line. If it breaks that support, then maybe I'm out. So 6,013 would be below that support level. Okay, so then I look and I see it's a pretty even ratio. Potential profit around 4,600, risk around 4,600. So if I do a market move, I have kind of 1-to-1 ratio here, potential profit to risk. Another option would be maybe you think it'll come down and test this support level and you'd rather do a pending order. Okay, and it does look like it's trying to downtrend some more still. So maybe what I do is execute when price hits. Take profits the same up here. Execute if it hits 6,000, let's say, let's draw another line, 6,030, okay, right about here. Okay, now all of a sudden we see possible profit 6,600, risk only 2,550. Okay, and it's the same support level that we're below, but now I could maybe cheat this down a little bit and say maybe I want to get below this wick right here as well. So it really has to become a strong downtrend to hit my stop loss. And at that spot, which is about 6,000 even, okay, I'm still at a better potential profit than risk. Okay, and so if that's where I would want to enter, now I just need to adjust my trade size to be the amount of risk that I'm comfortable with. So if I go to quarter of a lot, let's say, now I'm risking 750 to make 1,100. Maybe I only want to risk, say, 500. So I'm adjusting my trade size, and I see that's 450, so 0.18. And now I'm risking 540, which is about 1% of my balance. Maybe I'm comfortable with 540, which is just under 1% of my balance. And you can risk the percent of your balance or the dollar amount per trade that you're comfortable with. And you can calculate that here by adjusting the trade size and making sure you're risking the amount that you're comfortable with and going after a profit that is part of your profit goal as well. So once I'm set up here with the technicals, and in the direction that I think maybe the fundamental news would push this, then I click buy. Okay, now you see it didn't open a trade. If I go to my open trades, it's not here. Why? Because it's a pending order. So I'm sitting here hoping that it hits my trigger price at 6,030 and then jumps. Okay, and we're pretty close to that. If I expand this chart, I can see my entry price, my trigger price is here. And we're not far from that trigger price. Okay, so if it comes down and hits that trigger price, it enters the trade as a buy and would go after a take profit up here at today's high without having to break the high. And my stop loss would only get hit if it breaks all of this support level, which was old resistance here that we drew, and breaks down to my price level here for the stop loss. And if that does happen, then something must have changed fundamentally, I would think, because that would be, from a technical perspective, a downtrend that was triggered. Okay, breaking all of this support level and entering into a downtrend would make sense then maybe to get out of the buy position at that point. Okay, it is possible this climbs without dropping to our trigger price, and that's the chance you take, that maybe you're comfortable thinking it'll go up, but you're trying to get a better price, and maybe it just goes up with the fundamental news without coming back all the way to that support level area. And so you could do a market move, which as we looked at it, it was about an equal risk to potential profit at the time we looked at it just 5-10 minutes ago, and that's okay too. You can make a move like that as well. So there are a couple different ways to go after this from an entry perspective and risk management perspective. Okay, and that doesn't preclude you from doing both. So maybe I'm risking 1% if I get the better price, and maybe I'm willing also to say, you know what, I'll do a market move because maybe it won't go all the way back down if you think the news is that good. And so I'm going to do a market trade without waiting for the pending order with this setup. So 6,074, same take profit area, stop loss. I'll do the closer stop loss, which was just below this first support level rather than below the second one because I'm entering from further away. So 6,018, 6,020, somewhere in that range for stop loss might make sense. Okay, and because it's dropped some while we were setting this up, since the first look that we took at the market price, we actually have a better ratio now, potential profit to risk. So I can slide this down below this entire support level until I see maybe a 1-to-1 ratio. So 6,020, 6,018, I could maybe get below this wick, 6,013. And that's almost exactly even, 1-to-1 ratio. And so I can go after a trade that way. Now I go to the proper lot size to be the amount of risk that I'm comfortable with, 0.2. I'm risking 585, 0.18. I'm risking just under 1% of my balance, and so then I make my move. Okay, now that was a market move. So now you'll see that that's an actual position that's been opened. And we start in the negative slightly because there's a small spread on each position. So when they first open, you're slightly in the negative. And we'll see if this climbs right up towards the take profit, great. If not, then we have the chance to enter with a second position from a better price and perhaps even win on both of them. And at worst case scenario, we're risking 2% with these two trades, going after something more like 3% potential profit if they were to both open. Okay. All right. Any questions, comments on what we went over from a fundamental or technical perspective? I know our focus is technicals, but you also can ask questions about fundamental reasoning as well. I'll just pause for a moment. And just if you're not aware, when you go to the area where the open trades are and your pending orders, you can make adjustments to stop loss and take profit simply by left click and drag the line up and down. Okay, so I can reset where I want my stop loss and my take profit at any time while the trade's running or while a pending order is sitting. I can adjust my stop loss and take profit with an easy click on the chart. Just drag to any point that I might want it. Okay, and sometimes there are different reasons why you do that. Could be you want to, if it's moved into profit, you want to move your stop loss. Sometimes people will move it to the entry price or somewhere into a higher mark to preserve some of the profit. But it's very easy to use the charts as they're set up like this. Good question. No, we do not have trailing stop as an option just yet on our WebTrader platform or our app. You can set a trailing stop directly from the PC MetaTrader platform, MT4 or MT5. That trailing stop has to be set after the trade is already opened, and you need to stay logged in for it to stay active. Okay, so it is possible from the MetaTrader PC platforms. I did request to our developers that we get a trailing stop option added, and we're going to have some pretty major upgrades coming to our WebTrader platform in the not too distant future. So just hang on, and that should be an option eventually here. Very good question. Okay, so let's take a look then at some other movements. If we look at palladium, two L's, not one. If we look at palladium, we can see what I was alluding to earlier, that it's been on quite a run, and you'll really see it if I go to, say, 1-day candles. Okay, so on the 1-day candles, we can see in the past 1, 2, 3, 4, 5, 6, 7, 8, 9 days, 10 days, the price of palladium has climbed quite a bit, percentage-wise and numbers-wise. So we're looking at quite the movement on palladium. We also can look at platinum, which is even more dramatic. Platinum's really been the biggest mover of the precious metals in the past days. If we look at platinum, we're looking at in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, about the last 10 days, from near 1,000 price or 1,050 to where it is now, well over 1,250. I mean, we're talking 20, 25%, even 30% movement if we go back even a little further back to this range here in May. So quite a run up for platinum. And the question is there resistance here? When will this slow down? And as we go to 1 week candles, what we see is there's no resistance to be seen. Okay, we're talking approaching areas of all-time high if things continue. And we see this spike here. This was back in 2021. So we've got a ways to go before we would reach that price of 1350. So that's the main resistance I see as I look at 1 month candles. You might pick out this high point here, which is where it slowed down basically today. Okay, so it's not a coincidence that we get close to that price and you see it pull back. So if it breaks this price line, it looks like smooth sailing potentially to 1350. Okay, so that's the technical perspective. Let's zoom in. Here's our 2-hour candles. Here's that line we drew on the 1 month candles. Okay, so it could make sense to say if there's enough momentum from a technical perspective, since we're talking about technical strategies, if it breaks the 1 month candle resistance and say hits 1286, 1287, then perhaps you could see a run to a nice round number like 1300, or to the next major resistance that we drew at 1350. A lot of times round numbers are natural resistance points where some traders might sell. So 1300 you could look at from a technical perspective, and 1350 was that next line we drew on the 1 month candles. So it's pretty interesting that this pulled back right almost exactly at the 1 month candle resistance, and it doesn't appear to be plunging. Okay, so maybe there's a little sell-off on gold because it's climbed so much, but still folks are looking for precious metal to get into. Why? Well, CPI data was low, so that tells me maybe if rate cuts are going to come in the US, maybe it makes sense to get out of the US dollar because rate cuts tend to weaken currencies. So maybe in the short term, there's a run for a more underpriced safe haven or precious metal like platinum. Okay, and that run started about 2 weeks ago, from well under 1,000 to now well over 1,250 with the price. So it's interesting. A technical strategy is to wait for a breakthrough of a major price level, and that confirms upward momentum. So you could have a pending order up here around 1287, just above the 1 month candle resistance, that if it breaks through there, then maybe that convinces you that you think it will continue to climb further, looking towards either 1300 as a natural resistance point or 1350 as an actual resistance point on the 1 month candles. Okay. Now, if you were convinced that this might just continue to climb now, then a market move, if I'm going to start drawing support levels below, I see one right here. Okay, here's a breakthrough, here's a pullback, bouncing, and then up. So if I'm just doing a market buy, I would probably be looking, if I'm doing limited risk, get my stop loss at least below the first support level here. Okay, and since this was resistance, and then it goes up and this becomes support, this is kind of a support zone where it was resistance here and then support here. So this is a zone where it was resistance and support with a little bit of a space between. So I might put my stop loss below this zone as a support level, that if it breaks below there, then certainly we have a downtrend started. So stop loss may be down below 1232 from a technical perspective. So if I'm down here on 1225 with my stop loss, doing a market buy right now, hoping that this goes up, breaks through the resistance at 1284 or so, and then continues up towards 1300 or 1350. Okay, so if I'm doing a market buy, take profit, maybe I put 1350 thinking big, that's or 1348 just before that 1 month candle resistance up there. But I could also visually check back, and if it's up near 1300 and starting to struggle with that potential resistance level, I could do a partial close. I could move my stop loss up to entry, my stop loss up to entry or into a profit level to preserve some profit. There are a number of things I could do before it might reach the 1350 resistance, if indeed it was going to go that direction. Do some manual maneuvering as well along the way. So I'm going to go with the market move on this and say it's a lot of upward momentum. Yes, it pulled back some, but we've got a nice support level zone here, and I'll get my stop loss below there at 1225. So if I go 1225 with my stop loss, let's make sure I'm on buy position. 1225. Let's see here. And so I'm risking over 6,600, and so I just start adjusting the lot size to see the amount that would make sense for me. And I'm looking at a lot size of 0.04 to risk 1,000. .02 to be under 1% of my balance. 0.03, still under 1%. And so you can set that up and then do a market move to go with the current momentum if you think it will continue, as it looks like it very well might, as it goes up to try and challenge this 1 month candle resistance that pulled back from as it approached it once already. Okay. Any questions, comments? Let me take a look. I do see some communications that popped up. Okay, so the question is, why did the euro dollar rise? What was the motivation? Well, if you think about it, the US dollar had reason to weaken. Why? Because the CPI data came in lower than expected. And you might think, well, if inflation is low, that means the currency is getting stronger because prices aren't rising, which means you can buy with less dollars, you can buy more stuff. If prices aren't rising as much, if they're in fact coming down or rising slower, that low inflation tends to mean currencies are strengthening, and high inflation means currencies are weakening. But in this case, because the inflation numbers out of the US came in lower than expected, it's not those numbers that necessarily caused the USD to give ground against currencies like the euro. It would be more the anticipation of what that low inflationary data might mean in the near future. And I think many traders believe that as that CPI data comes in lower than expected, it increases the likelihood maybe that rate cuts then will come out of the US. And as we mentioned earlier in the webinar, if you lower interest rates, that tends to have a weakening effect on a currency. Okay, it's not one-to-one, it's not all the time, it's not necessarily exactly when a rate is cut that then the currency will for sure weaken, but there is a relationship there that if you raise interest rates, the money becomes more expensive to get, right? So it strengthens the currency. And if you lower interest rates, it's cheaper to take loans and to get a hold of the money. And so the money becomes less valuable or less strong in a general sense with lower interest rates. And so that, I think, had an effect today. The CPI data coming in significantly lower than expected. All the numbers across the board out of the US today, like I said, year over year, month over month, core and standard numbers all came in below expectation for inflationary data. And so I think that played a role with the USD weakening, with perhaps an increased idea that rate cuts could come sooner because of that data. Than compared to if that data came in, for example, higher than expected. Okay. All right. Any other questions? I don't see. I think this is a good place maybe to pull up a different instrument class. We could take a look at some USD pairings or the US dollar index. Since the Euro USD was mentioned, let's take a look at the Euro US dollar. Not a surprise that it's pushing up after what we just talked about. We see it's at a resistance level. And just as platinum is not having much trouble rising today against a weakening US dollar, so too seems to be true with the euro. And so this looks to me like an uptrend that doesn't want to stop yet. It hit this resistance on the 2-hour candles and temporarily pulled back, because that's what traders do. They put their sells at the resistance levels, so as it comes up, it drops. The traders sell. As it comes up, it hits that resistance, it drops. But now it's continuing to push back up because there's something real fundamentally behind this movement. There's something driving the euro to continue to outpace the US dollar right now. And again, I think a large part of that is the CPI data out of the US. And part of it could be the China-US trade deal that seems to have been agreed upon, at least the framework of it, kind of relieving the USD of the safe haven effect, where the US dollar strengthens when there's fear, along with the yen and some other safe haven currencies. The US dollar tends to maybe give back ground when folks are rushing back into the stocks. And so it makes sense that the euro in this situation, especially with the low CPI data, along with the China-US trade news, could be gaining ground like it is against the US dollar. So the question is, will it break this resistance? And if so, how far might it surge? I think we could see a breakthrough candle. If it breaks this resistance, just as it hit and pulled back, if it breaks the resistance, we may see a surge up to a certain point. So we need to look at larger candles perhaps to see, well, where's the next resistance level? So let's go to 4-hour candles. And I can take a look and say, if this does go up and break the resistance at this level here, let's say, we'll go back to the 2-hour candles. Okay, this is at 114.90 approximately that we drew this line. And so if we go to 4-hour candles again for a bigger view, okay, we've got this at 114.90, and we're waiting to see, will it go up and challenge this and break through? Okay. And there, I had to drag the chart a little to see the last 2 candles. So will it break through this? And it looks like while we're talking, it's breaking that resistance. So this looks like a buy situation. And the question is, where would you put your take profit and stop loss? I still don't see resistance up here. So I need to go to 1-day candles now. And as I look past this resistance, I see the next resistance level up here in the 1-day candles. Okay, that's the next spot where it hit and pulled back. And so that's over here at 115.47 or so. So if I'm buying on this, I'm putting take profit around 115.47 perhaps. It's the first resistance level I see on the 1-day candles. And my stop loss, I could put just back maybe 20 pips below If it reverses 20 pips, then maybe that was a false breakthrough of the resistance. So 114.70 maybe, okay? It's about 25 pips below the current price, and I'm still going after more than double the potential profit than the risk, okay? And so in the direction of the technical uptrend of the technical breakthrough, I just need to adjust my trade size now. One lot would risk 236. Two lots risks about 1% of my balance, a little less, 2.15. Gets me closer. Maybe 2.2 is the sweet spot, or 2.25. 2 1/4 lots, and I'm risking about 1% of my account to go after better than 2%. And if I like that setup, then I make that move as a market move. Because it looks like it's trying to break this resistance, a pending order a little higher could make sense if you want to wait for a complete breakthrough of the resistance. That's okay as well. But we do see on the smaller candles a breakthrough of this resistance level already that we drew. I mean, it just blew through it in the last, say, 5 to 6, 7 minutes. Okay, so that's why I did a market move instead of a pending move. But you could do a pending a little bit higher to try and weed out that maybe this is a false breakthrough that's about to pull back. Could happen, but we're limited risk anyways. And we did have a breakthrough, technical breakthrough of the resistance, and it's in the direction that the fundamental news tells us that maybe this should continue to move. Okay, so basically what we're doing here with these trades, we're trying to line up the technical analysis, the current trend and movement with the fundamental headwinds, to take the technical moves that look like active trends, or to trust support levels or resistance levels that are backed up by the current fundamental news at the same time. Okay, and so that's where we find ourselves with these trades, and we'll see how they carry out. Again, we managed risk in a way that's simple to do, that you know your risk before you get into it. And I keep using around 1% on each trade as a risk management strategy, but there's no rule on that. You can do 0.5%, you can do 2%, but at least you should know how much you're risking with each trade, whatever that level is that you settle on that's right for yourself. All right, everybody, thank you for joining. I think this is a good place to stop. Good luck with your trading the rest of the evening, and I'll be back at it tomorrow with a session at 11 a.m. UK time. And we'll focus a bit more on the fundamental news as we set up some potential trades as well. All right, everybody, thank you. Good luck with your trading. Bye for now.